RainFin is an online marketplace. We connect borrowers and investors directly to one another on our platform without the need for financial intermediaries, which traditionally were in the marketplace. I personally didn't like my bank. I felt that my bank was charging me too much interest on my credit card bills and was giving me too little money on my deposits. We started RainFin to try and change that, to make sure that those interest rates were fairer and that people could actually share the interest rates between them. RainFin is different to a bank in its fundamental elements. A bank traditionally is an intermediary. They borrow money from investors, they pay them a small return, and they re-lend that money out to people who need it, like borrowers, and they charge a huge margin for doing that, a huge margin and a huge leverage. Banks are made up of very simple business models. Get money as cheaply as possible and lend it on as expensive as possible and make as big a profit in the middle. RainFin is not any of those things. RainFin directly connects an individual investor with an individual borrower and takes very little transaction fees for doing that, therefore enabling these two parties to share in that profit amongst each other, making borrower rates cheaper and investor returns higher. RainFin has two customers, investors and borrowers. Within the borrower segment, we have anybody who needs a loan, from retail borrowers all the way through down to large corporate borrowers. On the investor side, we also have individual retail people, you and I, and we also have people who are large institutions who may want to use the platform. But in essence, at its heart, we want to create a prime marketplace, a marketplace which is there for good credit and for people looking for steady, stable returns on the investment side. We address the safety of investors' money in two ways. The first is we ensure their money is safe within the platform ourselves, which means things like making sure the money is in a Barclays Trust account, making sure there's usernames and passwords and access control security and servers and all of that stuff you would expect from an infrastructure point of view for bank-grade technology to have. We have that. The second thing we do in the context is make sure that you don't spend that money or lend that money in the wrong ways. We ensure that all the people you can lend it to have been through our screening processes, and we also ensure that you lend it out in a very pragmatic way. Little bits of money spread across lots of people to ensure you have minimal risk. Peer-to-peer doesn't have a specific regulation to cover peer-to-peer platforms as such, but peer-to-peer operates within the financial sector and also within the banking sector. So there are regulations that govern the areas that surround us. The first one is the National Credit Regulator, and we are compliant with the National Credit Act, that loans conducted through our platform are all in compliance with the National Credit Act in terms of affordability, security, offer and procedures. The second one is the Banks Act, and we are compliant with the Banks Act. We do not borrow money for the sole purpose of on lending, so we fall outside of the Banks Act jurisdictions. The third area is FAIS, which ensures that all of the participants on our platform are FECA'd. We know who those participants are, we understand who those participants transact with, so we don't have any money laundering that takes place on our platform. So in the end, where do I see RainFin being? From a Nirvana point of view, I believe marketplaces could be credit marketplaces with all types of investors and all types of borrowers conducting it on a platform in the marketplace, which is RainFin.